Let me show you a trading strategy that has made me thousands of dollars in my trading career. No guessing, no emotions, just clear, repeatable strategy using 3 tools: RSI, EMA, and Fibs. In this course, I'm going to be breaking down all of these tools for you. So first, we're going to start off with the RSI, which is the Relative Strength Index. I'm going to show you what it is, how to read it, and how to spot overbought and oversold conditions using the RSI. Next, we're going to go into the Fibonacci Retracement tool. This is one of the most powerful tools I've used in trading to this date. You'll learn what they are, how to use them, and how to take high probability trades using the Fibonacci Retracement tool. Finally, we'll talk about the EMAs, which is the Estimated Moving Averages. I'll show you my settings for them. I'll show you how it works, why they matter, and how they help you identify the trends. But the real magic happens when you put them all together, right? You want to find confluence between all 3 of these indicators to take a high probability trade, which is a lot better than I'm assuming most of you are already doing right now. You're going to be taking out that guesswork. You're going to be more confident in your trades. And by the end of this course, you will have completed a battle-tested strategy that you'll be able to apply within your trading. And if you want some more help, you can always book a consultation with me to start doing one-on-ones. This is just a course where I wanted to provide you guys with a free strategy you can start using right away without needing me there per se. So let's get right into it. All right, we'll talk about the first thing, which is going to be our RSI, the Relative Strength Index. The Relative Strength Index is right over here. I'm just making it bigger and smaller as we speak right now. And basically what it is it's an oscillator from 0 to 100, okay? And I have my settings, if you check here, I have my settings set to 70, 30 as my overbought and oversold, and then I have neutral at 50. So some people like doing it at 80-20. I personally find 70-30 has worked best for me, so obviously play around with it and see what you like more. However, for the sake of this, I'm going to keep it at my 70-30. So the first thing I want to show you guys is how you can identify what overbought and oversold sections are. So you can see here when we are above this dotted line here, which is set at 70, you can see right here it's at 70. This means that we are overbought. And when something is overbought, you know that it's going to come back down into either the neutral or oversold. And then you can see here when we are under the line, which is right here, this dotted line, which is below 30, we are in oversold territory. So when something is an oversold, we come back into either neutral, which we are right now at this current moment, or we continue up to being overbought again. And so the cycle continues. That's basically what overbought and oversold means. It means that the price is above 70 here, overbought, or below 30 here, oversold. So next, I'm going to show you how the price action mimics the RSI. So you can see here that if I zoom in really closely, right? If I zoom in and I come here, you can see that the price action, when it was oversold, came up, had a little bit of an upwards consolidation before moving further. So did the RSI. You see that? And so you're going to notice that the RSI and I want you to follow this dotted line that goes up and down here and look at where the price action is and where the RSI is, right? And what it's doing. It's literally drawing out the same thing. So that's just something to keep in mind when you're looking at the RSI, is that it mimics price action. So if the RSI is going to do something, the price is going to follow. However, there's an instance where this doesn't actually follow. And that's what we like to call divergence, right? So you have this bull and this bear here, right? This is what we call bullish and bearish divergences, okay? So I'm going to give you an example of one right now. Okay, you can see that we have a bullish divergence here. What is that, right? As I said, the price action likes to follow the RSI, but what happens when the price action doesn't follow the RSI? I'm just going to zoom in here so you guys get a very clear picture of what's going on with this bullish divergence, okay? So first thing is I want you to align the dotted line that goes up and down with the first part of the line here on this bullish divergence, which would be right here on the chart, to the second line on the bullish divergence, to the second point in the line. And you can see that that would be that point right there. So what I'm going to do is I'm going to take a straight line and I'm going to go from this point to this point. You can see that this point lines up with this point, and this point lines up with this point. I know I'm saying point a lot, but the point is that here on RSI divergency, you're making a higher low. Do you see that? I'm going to make it a little bit bigger. You can see this is a low, you're making a higher low. And so when you're making a higher low on the RSI, but on price action, which is supposed to mimic the RSI, you're making a lower low. That's what we call a bullish divergence. And that more likely than not leads to the RSI pumping up to the upside. Keeping in mind that it does make price action go lower because we're making a lower low instead of the RSI, which is making a higher low. So the same concept goes for bearish divergence, right? You can see here that when I zoom into the chart, right, I take this point. I know it's right here, so I'm going to grab my tool. It's going to be right here, all the way till the next point, which is right here. So you can see on the RSI, we created a lower high, right? This is a high, this is a lower high. But on the actual price action, we made a higher high. So same concept goes for bullish divergence. Obviously, it's going to push the price a little bit higher because we are making a higher high, but more likely or not, it always results in us finding oversold conditions. Okay, we're going from overbought to oversold. And so price action likes to follow. Overall, that's how you're going to be using your RSI for overbought, oversold, and you're going to be looking at bullish or bearish divergencies. Now, I want to show you how you can couple this with a Fibonacci retracement tool. In the next lesson here, I'm going to show you how to use Fibonacci retracement, and I'm going to show you how you can use both of them in confluence. So far, RSI and Fibs. So the first thing we're going to do is I'm going to show you what a Fibonacci retracement tool looks like. That's exactly what it looks like. So obviously there are different settings for different people. So just so that you know my settings, I'm going to put them up on the screen here. Okay, you can pause that and do it. Obviously some people like adding different colors. To me, it's confusing, but do what you wish with that. So what you're going to look at here is you're going to see the percentage. So this is the top point of my fib. This is the 100% of the fib, and this is the 0% of the fib. And everything in between is 23.6, 38.2, 50, 61.8. And if you followed my settings, you should have these in percentages. Otherwise, there'll be it'll be like 0.236, 0.382, right, and so on and so on. So next, I'm going to be showing you weaker versus stronger ranges. So what I'm going to do is I'm just going to give this as an example. Let's reset the chart and bring it right here. And I'm going to go from the bottom to the top. Obviously, I'll be showing you in a second how you can be placing your fibs, but I'm just explaining which percentages do what, right? So you can see that here we're doing a fib retracement tool, and we're looking for price to come down into our zone for a long. And you can see that, you know, the 382 is a weak form of a bounce. You know, you can see a little bit of it, but that overall represents what the 382 normally does. It's not a very strong point of reversal, but it's pretty weak. Then you have the 0.5 range, which is like in a normal trend, this would be where we bounce off of. And so that's what the 0.5 is for. And 618 is the golden ratio. So between 0.5 and 618 is where we place our golden ratio here. Okay, and a lot of people will say it's 618 to 786, so I'm going to show you exactly how I do it after. But just so you know, 618 is a very strong place of reversal, whether it's for longs or for shorts. Just in this case, it's for longs. And the 786 is where it's a very strong reversal point. So now that you understand all of the different percentages and what they are, in a nutshell, I'm going to show you a little bit more about my golden range. So for longs, right, I'm going to start over here just so that you guys can follow along with me. You see, for longs, we go from the bottom to the top of the move, right? The bottom is the first point, the top is the second point. That's how we know it's for longs. And a little tip is you're going to see discovery price below you if you're doing it correctly. Okay, you can see these lines. This is discovery price. They're far away from our regular lines of the fibs that I had told you about. There's 161%, 261%. I'll be explaining that shortly, but that's just how you know you're doing it correctly for those of you who are following along with me. Now, after we do this, we have a golden range. So we know that we have 0.5 or the 50% to the 61.8% of the 0618. Okay, and this is where we're going to be looking for a bounce up. So how do you take a trade using your position here in your toolbox is you place the trade at the top. So we would have been in it here, okay, already. and we have our stop loss below the 786. That's how we can kind of make sure that price doesn't just come down and bounce off the 786 and stop us out if we're sitting here. So always below the 786. Okay, and then take profit can be 2 to 1. So that's just how you set up your positions in terms of your stop loss and your take profits using the Fibonacci golden range for longs. Now I'm going to give you an example for shorts, how we can use that, right? So we have this zone right here. I'm going to take this out so you don't get confused. And what we do is we go from top first point to bottom second point. Okay, that's exactly how this works, is you go from bottom first point, top second point if it's a fib retracement for longs, which means you're waiting for price to retrace before you put your longs. Or you go from top first point, bottom second point, where you're waiting for price to retrace upwards before coming down again. So here you can see in this example, we have our golden ratio, you guessed it, at the 0.5618 right here. So what we'd do is we'd put our position here and we'd make it a short position because this is for shorts, and you'd know that because your discovery price is above, right? Before it was below, and your 0% is at the bottom, 100% is at the top, for those of you who want to see it that way as well. Now we'd put our entry point right here. We have our stop loss above the 786 this time. It's always past the 786, whether that's above or below for longs or shorts. And we have our take profit at 2 to 1. You can see this would have been a really good trade, but at the end of this, I'm going to go over some replays using random bars, and we'll have a chance to actually go through it and do it together live per se, right? Because these are random bars. So that is that for Fibonacci, and now I'm going to show you how you can find confluence within your Fibonacci ranges using EMAs. So I have to show you what EMAs are first, and then I'll put it all together for you. So let me just clear up this page here. Okay, so EMAs. What I like to do is I like to get this indicator on TradingView called EMA Ribbons. It's by Crypt. And basically, when you put it on your chart, it's not going to look like this at first. So I'm going to give you a second here to adjust your settings. You're going to want to do from 1 to 5 here. You're going to have 6, 12, 20, 100, 200. Style, you can put it in the same colors as me. That way you can follow along if you want. And that's going to be the only settings that you need for this. And it should end up looking something like this. So the first thing I'm going to explain to you in terms of EMAs are the different characteristics of it. So you see our pink line here is our 6-day, okay? That goes across up here. You can see that pink line, right? Pink line is 6-day, orange is 12, blue is 20-day, green is 200, and red is 100, okay? And so you can see that we have longer term and shorter term, right? These are 6, 12, and 20 days. This is 100 and 200 days. So shorter term EMAs, longer term EMAs. What's the difference? Shorter term EMAs like to stay close to the price action. Okay, you can see how they stay pretty tight to them, compared to longer term EMAs, which kind of just follow the overall trends of the markets. You see? And so that's the difference between longer and shorter term. And why is that important? Now, our EMAs in general, when price action is below them, so let's take the shorter term EMAs for example. When price action is below them, these EMAs act as a place of resistance, as you can see it's kind of doing right now, right? These EMAs act as resistance when price action is under. And so do the longer term EMAs, right? You see price action is under this red and green line, which is our longer term EMAs, and we're finding rejection on them, that's why we call them resistance, okay? Now, same goes for when price action is above, right? If price action is above the shorter term EMAs, you see the shorter term ones here, price action is above it, we're finding support on it, consistent support until we break through, okay? And same concept goes for the longer term. We have our longer term EMAs, the green and the red. We see support until we break through, okay? So just to sum that up, when price action is above the EMAs in general, the EMAs act as support, and when price action is below the EMAs act as resistance, okay? Now we're going to be talking about bullish and bearish crosses within the EMAs. So you can see here when a shorter term EMA, which is your 6-day, the pink line, when a shorter term EMA crosses below a longer term EMA, so the 20-day, which is the blue, that is what we call a bearish cross. Okay, I'm just going to get my brush here. This is what we call a bearish cross. And you can see that when the shorter term EMA crosses above the longer term EMA, which is the 20-day, and the 6-day, which is the pink line here, this is considered bullish. So I'll give you a few examples. Here you can see this is a bearish cross. Why? Because our shorter term EMA crossed below our longer term EMA. Here, same thing, shorter term below the long term EMA. But then for a bullish cross, let me try and find one here. For a bullish cross, you have your shorter term EMA going above the longer term EMA, which is your blue one, right? So 6-day goes above the 20-day. And so that's how you identify bullish and bearish crosses. And you can see when these cross, it more likely follows that trend, right? Sometimes you can see it gets jumbled up, but that's not when we want to be trading it. You wait for it to actually cross before you can use it as a method of trading, right? Now I want to show you the similar concept, but with the longer term EMAs, right? You have when your shorter term EMA crosses above, that's bullish. And when your shorter term EMA crosses below, that's bearish. Okay, so now that we've covered that, I want to show you exactly how you can use these 3 tools to create a strategy. Okay, so you have RSI, EMAs, and Fib. All right, so now I'm going to be showing you 3 different examples of which we can use these 3 tools with confluence in Forex, stocks, and crypto. Okay, so let's start with the Forex example here. Here I have Euro USD as my pair. And first thing I'm going to do is I'm going to find the first point, which is the bottom, to the second point, which is the top. And what I'm going to do is I'm going to mark out my golden range, which is 0.5 or 50% to the 61.8%. Next, what I'm going to do is I'm going to set a long position at the top of this range. I'm going to put my stop loss just below the 786, and take profit is going to be 2-to-1 risk to reward ratio. Okay, and so now I want to talk to you about the confluence. The first thing I see here is the RSI. The RSI just had a bearish divergence, and we're coming off of being overbought, which means we have plenty of time to come down to this zone in which, because the price action and RSI like to follow, if the RSI does come down to being oversold, then we should be in our range here. One confluence that I don't see here is between the EMAs and the Fib, because normally we like to see our EMA levels within the Fib range. But since we have 2 confluences here, we have our golden range within our Fib set, as well as the RSI saying that we have room to come down. I'm going to be taking this trade. So I'm putting it in 10x just so it goes by pretty quick, and I can give you guys a few examples of this. So let's press play now. Let's see what happens. You can see we're coming down. We were trying to be supported by the RSIs, but now, by the EMAs, but now we're below them, and we're trying to find resistance on them in order for us to come down and enter our trade. And I'm gonna make this very wide because we don't know how long this is gonna take. Okay, we've entered our trade, and now you see we are within a loss range right now, but we are not stopped out yet because our stop loss is here. We're finding resistance off of our EMAs here, as you can see. Again, okay, we pushed through both of them now, and we're in profit. So now let's see what happens here. You can see our RSI is showing a bearish divergence. We did come and tap back into our entry zone, but we're back in profit here. Let me keep moving this so we can see it until it hits our take profit zone. More likely or not, I would end up probably taking profit around here as it's pretty close, but as you can see, we hit our TP quite beautifully here with Forex. So that's the first one. Now I'm going to be showing you how to do this on stocks. So this is the S&P 500, ticker SPX, and you can see here we're in a downtrend. So I'm going to be trying to find a short here. So what I'm going to do is I'm going to place my fib from top, first point, to bottom, second point. Okay, I'm going to be taking my golden range here, having a short position set right at the 0.5 level, and stop loss above the 786 with a attacking this low here. Okay, so it's pretty good, 1.5 RR. So you can see here that our confluence is not really there with the EMAs yet again, but our RSI is showing that we have quite a bit of room to come to overbought. And in that case, I can expect us to either come around these EMAs or up to here. So for this trade, we'd be setting a limit order and just waiting for it to hit with our stop loss take profit predetermined. That way we can rest and just wait for it to hit. Okay, trust our TA. So in this case, I'm going to press play and we'll see how this plays out. So you can see we're finding resistance on our EMAs right now as price action is below, but we've just broken above. We are in overbought and we have been tapped in. Okay, so I'm going to extend this just in case if it takes a little bit extra time. Okay, we're back. We're hovering over our entry level here. The box is, our zone is staying respected. And now you can see that we made that little death cross on the EMAs where the 20-day crossed over below the 100-day and take profit is hit just like that. All right, so now I'm going to be showing you how to do this strategy on crypto. This is Ethereum on a 15-minute chart, and I've chosen to do a bit of a more local trade here. So you can see that I'm going to be looking for longs here. So I'm going to place my fib from the bottom, which is the first point right here, to the top, which is the second point right here. And I'm going to be putting my range at the golden range here, placing my long position at 0.5, stop loss below the 786, take profit is going to be 2 to 1, okay, or just about that. And we're going to see that how this plays out. But before that, we want to talk a bit about our confluence. So our EMAs are not showing much confluence right now, as you know, we don't have any of our EMAs within our range. However, we do have RSI, which is completely clearly oversold here. Clearly overbought here. So you're going to see that we're looking for price action to come down and retrace to this level, at which point the RSI allows for a big amount of room for us to drop, which should bring us into our range. All right, so let's do like 3x and see how this one plays out. Okay, you can see we tapped in right here. We got tapped in and pretty much hit our take profit right away. So whether this is on a shorter term, which is a more local term, or if this is more of a longer time frame thing, as you can see here that we did with our S&P trade here. If I take the measuring tool from when we were tapped in till the end of the trade was about 12 days. And then here we have quite a bit of a long time. So I wanted to show you a quicker one here. This one, I think it was like within a day, we got entered and we exited, 3 hours, right? So you can see that this strategy is quite versatile. And when you use these three tools, EMA, RSI, and Fib in Confluence, it gives you a higher probability trade every time. So I hope that you enjoyed this course. It was meant to provide you with something that you can start doing right away without really needing me to be there, providing that sort of say free value. And so if you want to learn more and you're very interested in this, you see that this works and I've sparked some sort of ambition within you, feel free to click the link in my Instagram bio or visit zyro.info and book your free consultation today to see how I can help you one-on-one to become the best trader possible. Thank you for listening, and I'll see you in the next one.